From the trading desk of Daily Forex, this is Christopher Lewis looking at the upcoming September 14th trading session. I've got the WTI Crude Oil market in front of you, and you can see we've had a very bullish run over the last 3 days. After a very significant sell-off, we formed a hammer, another hammer, and then today completed the move back to the highs from last week. Now, I think that when you measure the move from the downward trend line, it sets up a test of $50 again. If we can break above it and, more importantly, close above it on a daily candle, then I think we go higher. I still think there's probably a ceiling up here closer to 55 anyway. So at this point, I would suspect that we're going to run into a lot of trouble here at $50. Natural gas markets have been very volatile over the last couple of weeks. You can see we've done a round trip, basically. And now I still think the 310 level above is massive resistance. Now, occasionally on a chart, you'll see a level that truly matters, and 310 is one of them. You could make an argument for, some kind of ugly inverse head and shoulders, a basing pattern, whatever. But really, at this point, I think when you look at this chart, it looks as if we're trying to break out, but we get the inventory numbers today, and that's going to decide whether this holds again or if we roll right back over. That's 3:30 GMT. Keep that in mind. So it's going to take a while for the information to come out. When I look at this, the basing pattern suggests a move of 45 cents or so. No, 35 cents, excuse me. So you add 35 to the breakout, that gives you 345, which is right here. It's a very believable move. That's, where we had seen quite a bit of resistance in the past. So today is going to be very important. We'll see how it plays out, but after that announcement, we should get an idea as to where the market's going to go. Now, I think exhaustion and a pullback is probably the easier of the two routes, but I would not step in front of this until we get that announcement.